A very good afternoon to all our viewers. You have tuned into Market Fatafat on ET Now. I'm Shrishti Sharma and with me is Vinny Motiwala. And viewers, this is the show where we tell you all the stocks that are buzzing in trade right now, either on the back of the news flow or on the back of the technicals. We'll shortly connect with our research analyst as well as our team of experts onto the technical side. But before that, let's have a look at what the markets are up to. So Vinny, though the markets are falling, but the pharma sector is all in the pink of health.
Absolutely. Pharma sector, that's the only one that is actually, pulling out the gains today as well. Look at the pharma sector. Let's first talk about that because that's surely seeing an uptick of 4% in trade today, almost at the day's highest point as of now, That is surely one of the sectors that is pulling up overall the markets as well. But let's look at what the Nifty is doing there. And Nifty, that was a bit of a sluggishness that we saw coming in the Nifty. As of now, also look at it, it's trading at the day's lowest point. When you look at the Nifty, it's down almost 0.4% in trade. Sensex too, similar trends that we're seeing coming in for Sensex as well, but not as much of a sharp fall, but yes, 0.4 to 0.5% fall coming in the Sensex as well. Let's look at the broader markets. That's the one that's standing out today in trade as well. Whether you look at the mid-cap space, that's up 0.4% in trade. Surely strong strength shown on the mid-cap and the small-cap space, both of them trading with good gains. So outperformance coming in on the mid-cap, small-cap and the broader market side is what we're looking at. Looking at the Bank Nifty, sharp fall coming in the Bank Nifty as well, down almost 0.7% in trade. Today it's down almost more than 300 points of cuts is what we're seeing coming in for the Bank Nifty. And look at it at the morning, when you look at it at early morning trade, we saw that it opened up actually in the green. But yes, then it started seeing a fall, and as of now also with the markets, the Bank Nifty also is trading at the day's lowest point. Advanced decline ratio clearly in the favor of the declines coming in today as of now is what we're seeing. I beg your pardon, it's actually in the favor of advances, though the markets are down, but advanced decline ratio in the favor of advances versus in the favor of decline as well. Let's look at some of these individual mover names that we're seeing coming in today in trade. Among the top losers on the Nifty 50 today, we have M&M, Nestle, Tech M, BPCL, which are among the top losers in trade. Even Britannia is lagging in trade today. While obviously the pharma pack, that's the one gaining, right? So we see in the Nifty 50 also we have Cipla, we have Sun Pharma, DV's Lab, Dr. Reddy's. All those are the ones that are seeing strong gains in trade today. Look at it. Look at all the names that have come in. More than almost, Cipla is up as of now 10% approximately. Dr. Reddy's up almost 2% as well. Sun Pharma up almost 3 to 4%. Strong gains that we're seeing in the pharma pack. So all in all, pharma is the one that is surely leading the gains, while energy and autos are among the laggards that are coming in, while in terms of the sectoral performance. So that's how the market is looking like. Let's keep an eye out on what happens in the next couple of hours. Which side does the market finally pick up, because today is the monthly expiry as well, Shrishti. So that's why that volatility that you see is also a concern that comes in there. But on that note, let's get started with those individual stocks that are moving in trade, either on the back of news flows or on the back of technicals. And on the technicals, today we're joined by Kunal Bothra, while from the research team, we have Mamakshi as well as Ashesha joining with us. A very good afternoon to all three of you all. Good afternoon to you as well, Shrishti.
Good afternoon.
And let me start with the first stock that's in focus today, Colgate. Colgate is the stock that we're going to talk about. What they did is they reported their numbers. When you look at the numbers for the June quarter, it was a strong performance that came in from the company, above expectations, above what the street was expecting. When you look at the revenue growth, that's coming at 10.56%. We were expecting a growth of only around 6-7%. So that revenue growth was also stronger than what we were expecting. Even in terms of the operating performance, strong operating performance that has come in from the company as well. EBITDA, a 29% growth. Margins, a strong expansion on that front, 31.6% versus 27.2% last year. As well as, the key highlights is that volume growth number. Now that inferred volume growth is what analysts have highlighted is a 6% volume growth. Street was expecting around a 3-4%. So volume growth was surely much better than what the street was expecting. Company also highlighted that they've seen a double-digit growth in terms of the toothpaste business. The gross margins is seen an 8-quarter high, displaying a strong performance in terms of their pricing power as well. And the company highlighted that they are seeing initial signs of rural recovery as well. So strong performance that has come in from Colgate, and that is why it's meriting that up move of around 6.9% to 7% we're seeing as of now. Colgate trading at the day's highest point.
Okay, moving on, and like we were talking about, the pharma space from that pack have picked up Syngene, and this particular counter is seen to be buzzing on the back of a stellar results as well as a strong management commentary. Wherein this time around, the stock has been declaring good results, but now the company is actually getting future ready in terms of the expansion plans. We'll talk about that. Firstly, let's have a look at the numbers. Revenue reported at 808 crores versus 654 crores. EBITDA now jumped to 235 odd crores, and the margins also seem to be sitting at 28.3%. But going ahead, the company is optimistic that they're going to be achieving 30% in their overall EBITDA margin, and the profits saw an expansion from 74 crores to 93 crores in the quarter gone by. What exceptional they have done in the last quarter was they have actually made an investment into Stelis. US FDA approval has come in for their API manufacturing plant in Mangalore, as well as they have acquired a land in Hyderabad where they're going to be setting up a facility. So all these will be the key growth triggers of the company, but they say that they are on track to deliver onto their guidance. The Stelis deal is expected to close by October. They see a lot of headroom in the biologics business, and a lot of capacity will be coming on board by the start of the next year. So on the back of this, the investors are definitely happy, and the stock is seeing a good gains of around 5.5% to 6% right now.
Okay, that is Syngene, but let's move on and talk about a pharma name, and that pharma pack, Nifty Pharma, surely is the top sectoral gainer. Kunal, your first stock is Sun Pharma for us today, sitting with gains of almost 4%. Last 6 months, gains of almost 10%. What is the upside you see for Sun Pharma now?
Well, yes, good afternoon. First of all, looking quite strong for itself, Sun Pharma, as well as the entire pharma pack. Now, Sun Pharma in the last 1 month specifically has managed to break past about two of the very important psychological levels. One was around the 1,000 mark for Sun Pharma, where it took a lot of time to try and surpass those levels. And the second one was apparently 1,070-75 mark for Sun Pharma, which was a cluster of major resistance for the stock in the earlier attempt. So both these levels are taken out. The stock looks now very attractive from a short-term play. Momentum on its side. Pharma sector overall is looking quite charged up. We have other large cap names which have also tried to outperform in the last couple of months. So bullish on Sun Pharma, and expecting that the stock would carry on this momentum what we've seen in the last 1 or 2 months. Expecting an upside target for Sun Pharma closer to 1,200 over the very, very short term.
Okay, moving on and sticking to pharma majors then, and Cipla seeing no stopping after a good set of numbers. The stock is up anywhere between 10%. But Makshi, take us through the numbers and the updates coming in.
Well, yes, Cipla is up and away in the trading session today. We did see that the company reported a strong set of numbers in its first quarter. Revenue came in at 6,329 odd crores, and this is higher than our estimate of around 6,040 odd crores. EBITDA also came in at 1,494 crores, ahead of our estimates. Margins saw a marked improvement when we compare it to the first quarter of last year. Margins came in at 23.61%, and the net profit has also gone up quite sharply from 686 seen in the same quarter last year to 998 crores. Largely, the beat was driven by a better product mix as well as operating leverage. When we look at the US generics revenue, that saw an uptick of almost 9% on a sequential basis. The US business witnessed improved contribution from the generic Revlimid. In fact, they also the base business has improved on account of tapering of price erosion coupled with volume growth. One India business has also grown by nearly 12%, and this is on the ex-COVID basis. And India growth has also come in on account of improvement in its core therapies of respiratory as well as cardiac businesses. So all in all, it looks like a good set of numbers for Cipla, and that is the reason why the stock is surging in trade today, up nearly 11% as we speak.
Right. Keeping an eye out on Cipla, surging away in trade 11% as we speak. But let's move on, talk about Netweb and Ashesha. How is this stock looking like today?
Well, yes, new listing and the stock has seen an uptick of nearly 90% as compared to its issue price. The issue price stood at about 500, and the stock, as you can see, is trading at about 937, an uptick of a whopping 88%. So yes, good listing on the exchanges. Remember, it was a 631 crore IPO, out of which about 200 crores was fresh issue, and the balanced 425 crores was an offer for sale. As far as the objects of this issue is concerned, the company said that they will be using it for capex, for purchase of equipment and machinery, repayment of debt, and for other general corporate purposes. So yes, stellar listing coming in on the bourses. The stock is up nearly 88%.
Okay, but as Netweb Technologies make a strong debut, we did speak to CMD Sanjay Lodha, who remains confident of the growth ahead. Let's hear him out on that front.
Yeah, actually order book is basically one aspect of it, but basically order book is definitely good, and currently the order book is also looking very bright. And plus the most important thing in our situation is the pipeline. The pipeline is very robust actually. That shows us that basically we will show a good amount of growth. Almost all we will maintain our growth, what we are trying to do. And so I think that gives me the confidence, that my pipeline gives me the confidence that basically I will be able to grow very well.
Okay, that is the management of Netweb for you all. But let's move on and talk about PFCs on the charts and technicals. And Kunal, today PFC is trading with gains of 5%, has managed to see very strong gains in the last 6 months as well. 86% upside is already what we are seeing, Kunal. Now, is it time to maybe book out your profits, or do you still see a further run up?
I think we should be looking to ride the trend for PFC even from current levels. So, in the last 1 month, I remember, I think the month of June, the stock was on the verge of breaking past about 200 levels. It managed to expire above the 200 levels, if I'm not wrong. And at the July series so far, we are looking at the stock possibly expiring above the 250 mark, which means the momentum is just increasing or intensifying for PFC. The stock is moving into a very systematic kind of an upward trend. So even in the last 1 month, the stock had its fair share of correction, a mild drift, consolidation which has happened for the stock price. So which means that the stock patterns overall are quite attractive for PFC. RECs also managed to chug along quite well. Both these stocks, when they tend to do quite well in tandem, we've seen historically that the trends have been more sustainable. So would be bullish on PFC even from current levels. Not initiating a fresh buy, but for traders who've been holding on to long positions from previous levels, say sub 200 levels, I think they can continue to hold on to the stock even at current zone.
Okay, that is PFC, and that's the word coming in on PFC from Kunal. But let's move on and talk about Arvind, that reported its numbers just now. When you look at the numbers that have come in from the company, profits seeing a decline, and profits have come in just at 66 crores versus 98 crores last year. Also, in terms of the revenues of the company, that too has seen a decline as well. Look at the revenues, 1,853 crores is what the revenue is standing at versus 2,352 crores last year. Margins have remained almost flattish, just a 30 basis point expansion in terms of margins we are seeing. EBITDA margin is what I'm talking about, 9.7% versus 9.4%. So this is how it's looking like. Operating performance, when you look on the absolute term, the EBITDA, that too has seen a decline. Keep an eye out on the numbers. We had seen a fall coming in the stock price when the announcement came in of the numbers. Now trying to make a slight bit of a recovery, like you can see coming in on the screens. But as of now, Arvind is down almost 2.4% in trade. Let's move on to the next stock, and stock number 8 for today. We're going to talk about RVNL. Now, why is RVNL in focus is that government is actually looking to divest around 5.4% stake in RVNL. This includes a green show option of around 1.96% as well. And OFS that has opened up today for non-retailer investors today at around 5.36% stake, and the minimum price for that is decided at around 119 rupees, which is a discount of yesterday's price. When you look at it, it was at an 11% discount. Now tomorrow we'll be seeing that it will be opening for retail investors as well. So keep an eye out on RVNL today, trading with cuts of almost 4.3%.
Okay, moving on, and let's come back to the earnings. And Bajaj Finserv is the counter that reported its earnings today. Do remember that Bajaj Finance numbers were already declared yesterday, but today what we are getting to see is that the overall profit has grown by 73% on a YY basis for Bajaj Finserv. The number stands at 404 crores, while the revenue saw a jump of 74% on a YY basis at 595 crores. In terms of the other internals, then the General Insurance Corporation has seen their gross written premium at 3,834 crores versus 3,119 crores on a YY basis, and the Life Insurance Corporation has seen a gross written premium of 4,058 crores versus 4,369 crores on a YY basis. So a slight dip coming in on that particular front. But nevertheless, though Bajaj Finance is in the red, Bajaj Finserv is still holding itself in the green as of now.
Let's move on to the next one, and Kunal, on the charts, Granules is what we have picked out for us today. Today trading with gains. Last 6 months also seen not a bad number in terms of returns that has come in. At the current market price for Granules, would you still say at 321 it's still a buy for a viewer?
Well, it's definitely a candidate of a fresh breakout. Now, 7th of July, is where the stock had shown a strong up move from 300 to 315 on an intraday basis. And, within the last 2 weeks post that breakout, the stock had actually been into a range. So that 315 on the upper band for Granules was acting as a resistance of sorts, and closer to 300, 305 as a major support. Which means after that up move, the stock for the last 2-3 weeks was literally moving very sideways. Today you're seeing the second round of breakout coming back for Granules. That again is an interesting sign because volumes today are almost at a 2-week high for Granules, ending this phase of consolidation. So my sense is that the stock is now looking quite charged up. Momentum has come back again. Breakout is quite interesting on the short-term charts. So would expect this stock to carry forward the up move. Traders can look at a fresh buy at levels of 320 or below for Granules for fresh targets which could be kept closer to 340 plus mark.
Okay, moving on, and Vamakshi, coming to you for the next counter. REC is the counter that you have picked up. Tell us what's the news flow on this one.
Well, Srishi, this counter is in focus on the back of its Q1 numbers. Now, the stock was already perched at an all-time high, and today it has made a fresh record high after reporting its numbers. Let me quickly take you through the numbers. Net interest income has come slightly lower, 8.9% lower. It has come in at 3,640 odd crores. PPOP, that is the pre-provisioning operating profit, that has, however, seen an uptick of almost 8.9%. So it could be that the operating leverage is playing out for this counter. PPOP has come in at 3,370 odd crores. PAT has come in at 2,961 crores, and uptick of almost 21% on a year-on-year basis is what we have observed. Other than that, the company also declared an interim dividend of nearly 3 rupees per share. Now the board has gone ahead and they have also proposed raising of funds through the placement of unsecured as well as secured NCDs up to nearly 1,05,000 odd crores, and this is subject to the approval of the shareholders. The board is also seeking shareholders' approval for increasing the company's borrowing limit from 4,50,000 odd crores to 6 lakh crores in any foreign currency equivalent. The asset quality for this counter has also seen an improvement. So all in all, good set of numbers. They're raising capital, and that is the reason why REC is in focus today, post at the all-time high level as of now.
Okay, let's move on and talk about the next stock that is in focus today, and that is Jindal Stainless. Ashesha, why is this one in focus? Is it also an earnings candidate?
Well, yes, this is an earnings candidate and the stock is reacting positively. It is off the highest point of the day, but despite that, sitting with gains of nearly 1.5% as we speak. Both on a sequential as well as on a year-on-year basis, the numbers are very strong. Revenues are up 4% on a quarter-on-quarter basis and up 25% on a year-on-year basis. As far as profit after tax is concerned, that too has seen an uptick of nearly 3% on a sequential basis. Now, if we look at the year-on-year growth, it is on account of healthy growth that we saw in the domestic market. Demand from infrastructure segment continued to remain strong. Sales volume growth was seen across segments for the company, and the supply chain also was agile in the quarter gone by. The contribution that came in from exports in the quarter gone by was also very strong. In fact, the exports market grew by about 17% on a year-on-year basis, and they say that they continue to focus on export markets, especially in the US and Europe. So yes, good set of numbers, and that is what the stock is reacting to, 1.8% higher in trade as we speak.
Okay, moving on, and Kunal, coming to you for Piramal Enterprise. You have been tracking this counter closely. Just today on the back of buyback announcement, that stock was seen to be surging. But now, what are the next level that one should watch out for?
Yeah, the buyback in fact has acted as more of a fillip to the stock price trend because from 1,000 the stock has very quickly moved to that 1,100 club for itself. This is a multi-month up move for Piramal Enterprise. The stock has confirmed breakouts earlier about those levels of 200-day moving average, etc. Most of those technical resistances are taken out for the stock price. So this seems to be now a very smooth trending stock. I think now at 1100 plus mark, Piramal Enterprise could be more of a buy on dips candidate as well as a buy and hold from a medium term play. My expectation is that the stock should come back towards 1400 to 1500 in the next 6 months to 1 year. So with a gradual kind of a upward trajectory, that's what I'm anticipating, as well as a medium term time frame. Traders can look at a buy as well as a hold for Piramal.
Okay. traders can look at a buy as well as a hold for Piramal. But let's move on, talk about the next stock coming in from the FMCG pack. We have Marico. This one is in focus. Why? Because they made an acquisition and this is coming in the health and wellness space. So they have acquired a company which is the brand is Plix brand, and they have acquired 58% stake in Satya Nutraceuticals Private Limited. So currently, obviously, they've paid 370 crores for this 58% stake. So how is the division coming? Currently, they're holding around 32.75% stake. Later on, by May 2025, they will be acquiring the remaining 25.2% stake in the company by May 2025. Now, this brings a lot of synergies for the company as well. Why? Because in terms of the health and wellness space, plus the company wants to exit FY24 in terms of the digital first brand. They want a revenue from that of around 400 crores. So this will further push up the revenues for Marico as well. And currently, Plix as a company has a sales of around, for FY23, what we have the number was around 106 crore rupee sales is what they had in FY23 as well. Also, the company has a condition and a right to acquire the remaining stake in the company as well, the 42% stake, at the expiry of 3 years from the execution date. So on the back of that, we're keeping an eye out on Marico because this health and wellness space has surely picked up pace, and that is what is keeping Marico a buzz as well. And today also it's trading with gains right now.
Okay, moving on, and let's focus to IEX then, because this particular counter, if you see, is very near to its 52-week low levels, and today as well, not a great news coming in for this one, where the company is in focus as competitor HPX gets CERC not to launch the power contracts in 3 particular segments. They have allowed a Hindustan Power Exchange to introduce high price contract in high price day ahead market as well as high price term ahead market, and lastly high price contingency contracts. So these are the 3 segments where HPX has got the nod of CERC, and that's why we are seeing the stock of IEX under pressure. The stock is very near to its 52-week low levels, but despite the fact that we are seeing all the power stocks buzzing in trade today, this power associated company is not having a good day indeed.
Okay, surely keeping an eye out on that one. But let's talk about Manappuram Finance on the technicals. And Kunal, how is this gold finance here looking to you? What is it that one should be expecting from the charts for this one? Today trading almost at a 6-month high. Still a buy for you?
Well, yes, it's a buy from my side, and my sense is that Manappuram Finance has given 2 types of breakouts, swing pattern breakouts, both of them. One was the previous resistance, which was around 130 mark for the stock, and the second one was closer to 135 for itself. So today the stock seems to have confirmed that breakout. It's also ended 3 weeks of pause or sideways trend for itself. So that also augurs quite well for Manappuram Finance. And now the stock is headed towards the second or the third most important breakout level, which is around the 140 mark, which I believe could probably be the litmus test that whether the stock can come back to its prime, which is the 200 plus levels, or whether this could just be a short-term limited rally for Manappuram Finance. 140 is a major resistance for the stock price. It's taking a pause today, at least at those zones. If in case the stock crosses above this 140 mark, is where I believe that a much bigger trend could come back for the stock price, and hopefully the previous highs of 220 approximately should be taken out after that level of 140 is taken out.
Okay, keep an eye out on those levels for Manappuram Finance. But let's move on, and serving their numbers right now is Westlife Foodworld, surely making us hungry, but seems like the viewers and analysts and everyone is giving Westlife Foodworld a thumbs up as well. Look at the stock price and the sharp spike that we've seen coming in the stock. They've just announced their numbers, and when I look at the numbers, revenue growth of around 14% on a year-on-year basis, coming in at 615 crores. Net profits of the company, a strong growth of 21% as well. Margin seeing an expansion of around 60 basis points as well, while in terms of the EBITDA performance, that has been strong as well. EBITDA coming in at 105 versus 88 crores. The company has managed to add 4 new stores during this quarter as well, and all in all seems like a decent setup and a good set of numbers that has come in from Westlife Foodworld. The stock is trading with gains of, as of now, more than 3.5%. Shrishti.
Okay, so that's the numbers and the report card of Westlife Development. But with this, viewers, it's time to slip into a short break. But don't go anywhere, we'll be right back.
Invest in the